What's going on, everyone? My name is Anthony with evolutiontraders.com. We're going to be doing a technical analysis breakdown for all day traders and scalpers, overnight swing traders on the NASDAQ 100. So what we are currently looking at here is the daily time frame on the Triple Q's ETF. We're going to go over the price action. We're going to talk about potentially where we could make some money on some trades and what levels you guys need to be looking for so you guys can be able to benefit and profit with these on the short-term side of trading things. Predominantly, I'm an options trader, so 95% of the time I'm going to be trading short-term weekly expiration contracts. A lot of people don't like to trade short-term options contracts. They want to give themselves more time because of the decay and the burn, and you can lose a lot of money. 100% agree with you, but 95% of the times either I am buying and selling contracts in the same day or holding overnight only. Okay, so the burn and the decay is really not going to affect me all that much on my weekly contracts, and I do have technical stops close enough to we're not saying that I cannot lose, but I'm never going to blow up an account. So one thing that I always kind of want to tell options traders is that if you guys are going to trade options and you're going to trade weekly options expirations, right? Let's say, for example, you have a $10,000 account. You never want to risk $5, $6, $7, $8,000 on one particular trade, because one bad move or one setup that looks good that just doesn't perform well or as expected can eat your account up by 20, 30, 40% in one trade. Okay, so for example, if you have a $10,000 account, I would probably trade no more than, $500 to $1,000. $1,500 would probably be my max. That would be my account position sizing. I would keep it within there. If you play $1,000, $1,500 on, let's say, trading the Triple Qs, and you're buying short-term expirations, weekly expirations contracts, you can afford to buy 2, 3, 4 contracts at a time, and get 20 to 30% moves, which is not, flashy. It's not the most extravagant, but a 20, 30% move or 40% move in a very, very short amount of time on 3, 4, 5 contracts can still net you $200, $300 a trade. And I would keep your position sizing there until you're very, very well versed and comfortable and you start to build that cushion, right? And even as your account starts to grow, I wouldn't necessarily increase my position sizing anymore. I would just allow myself to take more trades in setups that I see using that same $1,000 to $2,000 per trade kind of idea, right? So even if you have a trade where you let completely get away from you and you burn that whole trade and let it decay completely worthless, or let it expire completely worthless, you're losing $1,000. You've still got $9,000 more dollars to go, and not letting something that's $6,000, $7,000 go completely worthless. I've seen it happen and heard of it happening to people before. Again, when you trade, you always have to protect that, risk management. You need to focus on risk management. That's all it is. You have to stay in this business for a long time, and in order to stay in this business for a long time, you're going to need money, right? So looking at the Triple Qs on the way that we finished up here, we had a little bit of a gap down. We did come down to this 50 EMA here. I do like that the bulls did step in and they bought this up, okay? So as we came in and we bought this back up, we got over this linear regression channel here, right? This blue line that I'm kind of dragging the cursor across. This linear regression channel, I love using these. It's good to kind of play the bounces off of them, sell for profits, let them break and retest and then get back in. I love using them for my overall macro technical analysis trading, right? I don't use them every single time. It doesn't mean that just because we're over a channel level I need to get long, or below a channel I need to get short. And it doesn't mean that. I just like to use it as a gauge to understand where potentially we could have some hard supply, where potentially could we have some hard support. One thing that I did not like, we did not close over the 5-day moving average. Not necessarily a big problem, but anytime we're below a 5-day moving average, it's normally the shortest term sentiment, right? 5 days, it's going to tell you, 9 times out of 10, who's got control of the opening for tomorrow. So being that we did test this, but we did not close over it, I could give a little bit of power to the sellers tomorrow. We could open up either flat or maybe open off with a little bit of a sell off, and then wait for those bulls within that first hour to hour and a half, kind of trap those shorts and then go from red to green. That's what I would be looking for here. What I'm looking for here, levels on the Triple Qs, if you would like to trade the ETF tomorrow, is over today's highs and over this 5-day moving average. That price right now now is $286.61. That's going to be my mark where I'm going to want to get long. I'm going to want to take profits into the next area of supply. That next area of supply for me is going to be the 100 EMA, and I'm going to look to take profits before $290. Okay, that's the way that I trade. If you see all of these lines on my chart, you're kind of wondering, how do I use them? What do I use them for? I look at it as, I'm back in kindergarten and my teacher gives me a coloring book and they say, stay inside the lines. I want to stay inside the lines. I don't want to be greedy. I don't want to expect too much. And I want to also respect the lines. Each area and each line, each color is a different area of supply, a different area of demand. All of these moving averages mean something. Some of them mean a little bit more than others, but I like to kind of stay within the lines here. So anything over the 5-day moving average, I'm going to go ahead and take long and lock in my profits before we get to $290 and probably call it a day on that. Now, if we do open up green or we gap over this 5-day moving average, I'm going to need to do one of two things. I'm going to need to at least wait for 1 to 2 hours to get that first hour candle to see if we do close over this, and then we need to confirm. If that's the case, I'm going to need to be over $291.84, and then even with that, I'm only going to be looking to take profits at around $293, right? But that would be a big move. That would be an 8 to 9 point move in one day. I don't think that's going to happen. So what I think could happen is I think that we could either open up flat or open up a little bit down, give it that first 30 minutes to kind of trap shorts here, and then go red to green, take out this 5-day moving average and get the 1 to 2 points there. Now, if we gap down, what I'm looking for on a short position is below $280.69. If we get that confirmation below this 50 EMA, I would look to try to take profits into the 10-day moving average sitting at around 278. Again, another $1 to $2 move here. We're not thinking in terms of going to the moon. We're not thinking in terms of I need to hit a home run. What we're thinking of is terms of I need it. Where can I get in? Where can I push my chips to the center of the table? Where can I make $1? Where can I make $1.50? Where can I make 75 cents? Where can I make $2? Where could I do that the safest and fastest possible way to where I can get in and get out? Those are the levels that I got for you guys. If you guys like this kind of technical analysis trading, make sure you guys join the Discord. That link is down in the description box below. If you guys would like to know my name, a little bit more about myself, check my description box. My name is D. Anthony. My website is evolutiontraders.com. I will see you guys all tomorrow. Again, stay safe, practice good risk management, make sure to stick to the same strategy and respect technical analysis. I will see you guys all in the next video.